Hello everyone, welcome to my channel. Today I'm going to talk about you may receive an IRS form 1099K this year. Let's get into the video. Effective for 2022 and later years, Congress reduced the threshold for the form 1099K filing requirement from 20,000 to a mere 600. So you might ask, what does that have to do with me? This change can impact taxpayers in several ways, some unexpected, so you may find yourself in for a surprise that can be unpleasant in some situations. Today, I'm going to look at the several ways taxpayers can be affected. But first, I need to look at the purpose of the 1099K and what can occur for you to receive one. The 1099K was created by the IRS as a means to detect unreported income by businesses. The IRS does that by requiring third-party settlement organizations such as credit card companies, eBay, Venmo, and others to report the transactions they have handled for an individual or business on a 1099K if the gross amount of those transactions exceeds a specific threshold. Let's look at an example. Susan, who owns and operates a gift shop, accepts credit cards for purchases made by her customers. Since the credit card transactions are processed through a third party settlement organization, that third party must issue a 1099K for the total dollar amount of credit card transactions that Susan had for the year. The 1099K goes to the IRS and a copy goes to Susan. The IRS can then compare the 1099K amount to the amount Susan reports as the gross income from her business. The IRS is also aware of, through studies they have conducted, the amount of cash sales certain types of businesses might have. With this information, the IRS can effectively identify taxpayers who are not reporting all their income and ID them for audit. Although primarily intended for businesses, there are situations where you may find yourself a recipient 1099K. One such situation is where a taxpayer is downsizing and sells personal property on eBay. If the total amount sold is 600 or more, the taxpayer will receive a 1099K. Although these sales are generally not taxable since used personal items are usually sold for less than their cost. The IRS does not know the circumstances of the sale, and if the amount is significant, it needs to be reconciled on the individual tax return. A sale of property that results in a loss is not deductible for tax purposes. In prior years, because the threshold for requiring a 1099K was 20,000, a 1099K was never issued to most non-business taxpayers, so there was no concern about reconciliation. Many taxpayers are also involved in the gig economy, selling their products through Etsy, eBay, etc., or hiring out the services on TaskRabbit. Others may be driving for Uber or Lyft or making deliveries through DoorDash, Uber Eats, etc. Some individuals have been meeting their tax responsibilities from these activities, while others have not. thus prompting Congress to reduce the threshold. In either case, it is important that these individuals keep records of their expenses associated with their income producing activities to reduce any tax liability. Here are some examples: cost of goods sold, advertising, vehicle travel, business cell phone service, internet service for online sales, office supplies, postage and shipping. Some may qualify for a home office deduction. Since these activities are generally treated as self-employed income, here are other issues to be aware of. Self-employed tax, which is like Social Security and Medicare taxes paid by employees and matched by the employer through payroll taxes, except a self-employed individual pays both the employees and the employer's share, which combined can total 15.3 of net profit. Self-employment retirement. Self-employment income qualifies for IRA contributions and the very popular simplified employee pension plan, SEP, better known as SAP, where a self-employed individual can contribute a tax-deductible amount of 20% of their net earning to the retirement plan. Self-employed health insurance deduction. Most self-employed individuals can deduct as an above-the-line expense 100% of the amount paid during the tax year for medical insurance on behalf of the taxpayer, spouse, dependents, and the children under the age of 27, even if the child is not a dependent. However, this deduction is limited to the net income from the business. Hobby versus business. Whether the activity is truly a business or just a hobby impacts how the income is reported on the tax return. Deductibility of expenses, including medical insurance premiums, whether self-employment tax applies, and if contributions to retirement plans can be based on the activity's income. As you can see, all of this can become quite complicated, and the penalties for not reporting self-employment income can be severe. If you or your company needs help with preparing your tax return, feel free to contact me. My contact information is listed below in the description of the video. Thanks for watching this video, and do not forget to subscribe to my channel.